There was an analysis of about 4 to 5,000 applications and looking at the median credit scores, collections, and bankruptcies across the board. And also the rent to income ratios. Those have been shifting quite dramatically over the last 5 years or so. It used to be the age old 30% rent to income, and then it creeped up to 35, and then we see 40. And then if you're in Toronto, it's not unusual to see 50% rent to income. And people are just spending more on a roof over their head. So it's the reality of the market that we're in right now.
Yeah. And to be honest, like if anything, I think it's going to get worse for a bit in terms of landlords. Well, I think it's going to get worse in general, probably for a bit, but I think even just
Yeah.
landlords like leaving the market as a whole right now.
Yep.
In the grand scheme of things and in the long, in the long run, we're going to have less housing, in my opinion, as
Yep.
people are just starting to sell. Because, and you probably speak to a lot of investors right now. They're trying to figure out, okay, do I rent these units? And then if they're rented and then with the higher rates, like, does it even make sense to keep it? Or, do they sell it and just get back into, something different?